In this video, we're going to hop into 3 things that are keeping the San Diego market from completely crashing. I'm going to bring up a chart and show you that we have seen a bit of a drop from peak to where we are right now, but we haven't seen it continue to fall. It's actually continuing, it's starting to rise again. So this chart right here, we're seeing the weekly housing market data, the median sales price, which peaked in May and June of last year. And this is kind of the time frame when we saw, which we'll get into a little bit, interest rates start to go a little bit higher. You can see there was quite the bit of drop off in housing prices to where we are now. We did cross under, so year over year, we still are down about 4%. This is for all of San Diego County, and it is starting to track back up. But where will that go? So instead of continuing this downward spiral on this side, we're starting to see it go up a little bit. So we're going to get into 3 factors that are potentially causing this, so you guys know what's going on in the San Diego real estate market. As always, thanks for tuning in. I'm Chris Erickson. We got Lauren Sanders over there with the Beach Life Group. We are the real estate crew right here in North County, San Diego. So if you guys want some more info, just want to have a conversation, drop us a line, book your discovery call. All that information is right below. We got you back on making the move here in North County, San Diego. So let's jump into 3 things keeping the San Diego housing market from crashing.
Hey, so if you're talking about the market and what's going to keep it from crashing, let's take a look at the new listings first that we're seeing come on. And if you look at a historic chart on new listings, it's like this over the time frame. It's basically goes up, it gets to a bottom in November, and it shoots up almost straight up and then comes back down in our particular market. And this one's spread out a little bit, but when I look at like a 10-year chart, it's like this. It's like a, what are those echo?
It's like a little wave.
Yeah. So typically, like we talked about seasonality before, there's the lowest number of listings is in the November, December timeframe. And then people start listing their houses in January, February, March, April, May, June, July, and it kind of peaks in August and then comes back down. So, we're seeing more listings come on, but when you read some things, it'll say, hey, there's 72% increase in inventory. That's coming from a very low number. So on a historical basis, our inventory is still quite low. And that's one of the key factors that is going to keep the market from crashing. If there's not enough inventory for people to buy, you're just not going to see a big drop in prices.
Yep. And this chart that we're seeing right now, the Redfin chart, is showing new listings coming onto the market compared to last year. So we're about 42% below where we were last year, which is pretty crazy. Now, the demand was a bit higher last year. We did see some more buyers out there compared to what we saw this year. So just to give you an example, depends on what price point you're on, but home we saw it out in San Marcos, it was about that $650 range. And you would think like last year it would have got 10, 15, 20 offers. This year, there is still multiple offers. Last time I talked to the agent, which was earlier this week, there was already 4 offers on the property. So they're not seeing that feeding frenzy that we had before, but a lot of this is due to the limited number of listings compared to the same amount of buyers that are out there right now.
Yeah. And buyers have definitely picked up from November, December, started picking up. And, as rates dropped a little bit, now they've bounced back up. So it's going to be interesting to see how that plays out with the interest rate market. But in general, one of the big things that's going to keep this market stabilized to a degree is the lack of inventory. And there still really is. We're at a month's supply right about now. At the trough last year, we were at a half a month or sometimes less than half a month supply. And we went up over close to 1.8 months supply. So we've kind of shot up and then we've come back down. And for some historical kind of context, half a month, 1 month, 2 months, we need to see 3 months supply to kind of get to a more normalized market. Historically, 1 month supply of inventory is super low.
Yeah, and on the chart here, you can see towards the end of last year, it did start creeping up. We did peak out in the end of November here. This is in weeks, so about 12.8 weeks, a little over 3 months. Then it started to drop. Usually we wouldn't see it drop kind of going into the December months, but coming into January, you can see it even drop even lower. So this is kind of a gauge of how many homes are coming on the market to how many buyers are out there. So it's a good gauge on the demand out there. Right now, we're sitting in San Diego County about 7 weeks supply, still over last year, which was about crazy low, 2.6. This is weeks supply, meaning homes were usually sitting on the market for 1 to 2 weeks. Now we're seeing them sit on the market for 3, 4, 5 weeks. Like I said, every house is different, but just if we're taking broad numbers here, that is kind of what we're seeing out there. And the average days on market, let me see here, median days on market here. This is helping to add a little bit to inventory, but not a crazy amount. It's as homes sit on the market, you add to the supply that's there before the new supply is taken off. So you kind of are replenishing. So we did see a little bit of that towards the end of last year. We got up to 40 days on market. Now you can see that kind of dropping back down. Still, last year, it was sitting about 9 days on market. And now we're sitting right about 30 days on market for San Diego County.
Yeah, I mean, honestly, in the past, if you looked at the past 10 years, the majority of it would be bouncing between 30 to 60 days average market time. And then we trended down and got to this, ridiculously low amount during COVID, during that kind of period. And now we're going back up to a more normalized, like 30 to 40 days is a normal, kind of a more normal market. So essentially what we're seeing as we ended last year, more buyers stepped into the market. And so there are more buyers right now in our current marketplace looking for homes. I think also there's going to be more buyers this year versus last year, even if rates are higher, because there's this effect of normalizing over time. Oh, well, it is what it is. There's not this great hope that we're going to go back to 2 or 3%, because that's probably long gone. I don't know if we'll ever see that again. Hopefully we never see it again, because that means there's some serious problems if we went back to 3%. And when you look at the number of pendings and sales, they're all down, but new listings are down. New pendings are down. The number of closed sales are down. So when you look at the overall market, you got to look at them in context is the best thing I could say if you're trying to gauge the market, because you can't just look at year over year. That tells you a little bit of the story, but like inventory is up year over year right now, probably 100% or 80% in some places. And is that really the true story? I don't know. It sounds dramatic. The other thing I think we should look at is as rates go up, when you see loan applications come down, that's future business. And one thing though is there's going to be a hesitancy of people that planned on selling their house to buy another one this year. If rates get too high, they may wait, which means inventory could stay relatively muted over this period of time while rates are up. There's so many factors to consider. The great news is we're on this stuff every day, so we like sharing our information that we have. We're also here to answer questions, because all of this stuff you got to take into context and look really hard at whatever area you're looking in, price bracket, neighborhoods, because they're not all experiencing this the same way. So we're trying to give a good broad brush of what's happening in San Diego. So one of the things we like to say, Chris, as we're talking about all of this is if you're a year away or 2 years away, you're starting to think about retiring, or you're going to make a move, feel free to call us. We're not going to hammer you. We're here to answer your questions and be helpful and tell us what your situation is over time. And we can track the market together for you. And also, if your move is imminent, we're here to help. Obviously that too, aren't we?
Yep. We got your back when making the move here in North County, San Diego.